Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
You probably noticed that we're not in our regular place. We're traveling. The last video we did was the same. It's a traveling video. But even though we're traveling, it doesn't change what's going on in real estate, and it doesn't change the fact that we're reading every day a bunch of articles, probably 10 or 20 articles, just trying to learn about what's going on. And we came across this Realtor.com weekly housing trends. Now, I'm going to put the chart up and explain what it is. Okay, so what they did is they looked at data for the week of May 14th of 2021, a year ago. Mm-hmm. And then they took data for May 14th of this year. Mm-hmm. So year over year change. And this is what they came up with. We'll go over these one at a time. Median list prices up 15.9%. What does that reflect, Juana? Why would list prices just be up?
That reflects sellers saying, hey, look, my neighbor's house sold for more money. I want more money still. So yep. There's a little bit of profit taking going on.
Okay, so more clearly over the year, home prices have gone up, and whatever home was listed. So let's just put this in round numbers. If a house was listed for $300,000 a year ago, it's probably going to get $345,000.
Or more. So, our anecdotal information is that anything that we've put on the market this year just about has closed. By the time we put it on the market, it gets an accepted offer, it's in escrow. By the time we close, more often than not, that house is worth more than at the time that we put it on the market. So to give you a perspective, so maybe we put the house on the market for $500,000. By the time we close on it, maybe it's worth $525,000. So that buyer is actually closing with equity that they earned while they were in escrow.
And it's just the same way if you buy a new house, when you lock in that price and then you close 9 months later, the house should be worth more in value because you lock in a price at today's market rates, but moving forward in time, if the appreciating market, same thing happens or opposite thing happens in a declining market. If you buy lock in that today's value and then the value declines, you've lost money before you've even moved in. So new listings up 6%. So that's new people who have, like, the number of new listings that came in for 1 week in April or May of last year versus this year, it's 6. So if they had 100 listings in a market, 106 popped up this week.
Right.
So it's a little more activity.
So there is more activity. And I think the reason we have more activity is because I think sellers are looking at what's going on in the marketplace. They're looking at rising interest rates and they're saying, hey, look, I'm going to get the most money for the house that while buyers can still afford the interest rates. So maybe I was going to sell in the fall, but I'm going to sell now instead so I can get top dollar for my house.
The next number here, active listings up 5%. That's the total number of listings. So it's going to run in line with new listings because if there's more new listings coming on, then the total number of active listings is going to be more. But what's really interesting is time on the market, 6 days faster. Now it's a negative arrow, but that doesn't mean bad. It just means it's the lower number. So if the time on the market was 20 days a year ago, that means it's 14 days now. So Juana, what does that mean? More houses coming on the market, but selling even faster. That's almost counterintuitive because the people out there that are the housing crash people that have already thumbs down the video, right? Oh, this is a terrible video because it doesn't support my belief. If the excess number of listings should be more time on the market and home prices starting to soften, but the opposite's happening. And why is that? Why would that be happening in May of this year?
Okay, so a couple things. First of all, buyers are in a good position from the perspective that there are more listings coming on, which means that they have more choices, and so that's a good thing. But as far as less days on the market, again, we're going back to what I just said. Buyers are looking at this going, hey, interest rates are going up. Every day that I don't get a house, I'm going to end up paying more in interest on my loan. So I may as well just bite the bullet and buy something that I like and buy it now and not mess around with it, pay whatever it takes to get in that house. It's still a tough time to be a buyer, and I feel for you. Yeah. It's still a good time to be a seller, although sellers are getting nervous. I'm definitely sensing that from some of the sellers that we have. Like I said, maybe they were going to sell later in the year, and they're going, nope, I'm going to sell right now while the getting's good because I don't think this is going to last.
Yeah, so this goes into that trying to time the market. There are still people who think, hey, the interest rate's going up and economy slowing and recession, and we're probably already in the recession. I mean, it's kind of goofy because when you say recession, it's very it's an arbitrary thing because all it means is 2 consecutive quarters of negative GDP growth. But it's how they measure GDP, and then other things are not doing poorly. Like air travel is not doing poorly; it's doing great. It's air travel is greater, like in a recession, but we have people traveling like crazy, and usually the opposite happens in a recession. People don't travel, right? And then you have same thing in the housing market, right? Because the housing market tends to do well in inflation. There's only been one time ever where the housing market tanked during a recession. That was the last time. It was actually the recession was caused by the housing market tanking. So it's very interesting to see this. And the other thing too is you have these people who said, "Hey, I'm going to sell my house in 6 months, but because that's when I need to sell because I'm moving somewhere or whatever." And then they're deciding today, "Hey, let's just get this done." So you have 2 people sort of trying to time the market because people are watching all these videos because they're trying to get information. So you have the buyers, like Juan has said, going, "I'm just going to lock it in now. I'm going to get that loan. I'm not going to wait for interest rates to go up another 2% or whatever, so I can just get the house because I'd rather pay whatever now." And then you have sellers doing the same thing. So you have more new listings, more active listings, and then quicker time on the market because there's just more churn happening right now.
There is. And the other thing is, we've said this before, it's seasonal too, although this churn tends to happen a little bit earlier on. But I think with the rise in interest rates, I think it's prolonging that spring selling season as far as the number of homes coming on the market, because it's taking that inventory that would have come on the market later in the year and it's bringing it on the market now. So it'll be interesting to see what happens later in the year when this inventory would have come on the market. Are we going to have substantially less inventory in the fall? That's a possibility.
Yeah, so what we're going to do is, now what's going to happen is the outlook between here and the end of the year is that their inventory is going to rise because it does every year. Even last year, inventory rose, and then in like November, December, it kind of peaked and then it started dropping off again as buyers showed up again. And then time on the market was longer too. But what we're going to do is we're going to track this weekly housing trend. It's a weekly thing we have access to. And then as soon as we see negative numbers, we're going to do a video. So probably our next video, we may do this in like 3 or 4 months. But the next video will be when like median list prices dropped year over year nationally. And these are national numbers. This isn't Vegas.
Right. So it's all really interesting to watch. As you guys know, we like numbers and we like anything that we can quantify so that we can better understand it. We're not very hot on what people feel so much. We are very hot on anything that we can sink our teeth into as far as numbers.
All right. If you made it to the end of the video, thanks. Please subscribe, hit the notification bell. Leave us your comments, and we will see you on the next video.
Bye.
Bye.